Yeah, we're back to the one chart that rules them all. Look at where we are now. We're back down to 14 basis points on the yield curve. This is, if it's not a flashing red, it is the brightest yellow you can imagine. And what this means is that we're going to have a bear market a year from now. Could come as early as 10 months from now, maybe as late as 14 months. But let's just say about a year, give or take a couple of months. This is going to be a crisis. Now, that doesn't mean that the market can't go to new all-time highs. In the meantime, it can. But what we need to be doing is we need to be playing the market most likely from the long side over the short term, but we need to be starting to mentally prepare ourselves for a significant bear market down the road. Don't panic now. I'll guide you. I'll let you know when it's time to go short, when it's time to protect yourself, and so on and so forth. Hey, everybody. Courtney Smith. Yes, I'm happy as can be, even after what I just said. That's me with my cherubic smile there. I started Wall Street Winners actually back in 1995. Okay, and of course, this has been involved in the markets forever. Let's get right into it. First of all, let's get some good news here. The S&P 500 made a new high on this move. And now you'll notice, if you look very closely, we broke above all those highs that the market had made back in October, November, and December. So this Friday was a particularly good day in the marketplace. It actually occurred on heavy volume as well. So this is good. This is bullish. This is kind of bullish. Okay, so here we have in the upper right-hand corner, you can see we finally got some more buying pressure than selling pressure. The green line is above the red line, so that's good. But notice that the Dow didn't make a new high, mainly because, of course, Boeing got, grounded. The Nasdaq, let's take a look at the Nasdaq. The Nasdaq also made a new high, barely made a new high over the October highs. That's really good. But, look at that purple predictor. We now have a divergence there. The price action made a new high. The purple predictor showing the smart money did not make a new high. And that is actually bearish and would suggest that, yes, we can continue to move higher, but it's not going to be that good of a bull market, okay? It's not going to be that good of a bull market. It's going to be a struggler. Our seasonality indicator, well, we broke above it back in February and came down after just one day. So we still got to wait for it to close above 158 before I can say it's a bull market. Seasonality, bullish till July, boring. Yield curve, we already talked about it. Now, asset allocation, we got some money coming out of the bond market. That's where we got some of the cash for this market to move higher. Our RISKDICATOR, though, went down. The RISKDICATOR said that they want to get into more defensive or conservative sectors. They don't want to be in risky technology and high tech and so on and so forth. So they're starting to hunker down a little here. Hunker down, I got that term from the Journal of Portfolio Management, by the way, just to be clear here. Okay, global shares also made new highs here, so that's very supportive. Bonds, this is where we got some of the money. It's just, kind of stabilized this week under the old highs that we made. I'm actually a bit bullish on bonds here. Purple predictor is not helping, so I'm not wildly bullish, that's for sure. Let's take a look at our key factors. So the green line are bonds, that I should say treasury notes. They made new low yields. The blue line, 10-year treasuries in Germany, they made new low yields. But the thing that I've been highlighting is the gold line and the chart. Both of those are leading indicators of bond yields. And they're suggesting that 3 to 6 months down the road, we're going to see interest rates go back up again. And for the sake of the world, I hope that's the case, because that would then probably turn the yield curve back to positive. A negative yield curve is going to be bad for the global economy, the U.S. economy, the stock market. It's going to be a nasty, nasty thing. So for society's sake, I certainly hope that we get higher long-term interest rates. The dollar, like I said, it's so boring, man. Who cares? Now, gold, I'm actually a bit bullish on again. We broke down, and I told you all to get out. Let's take a look at our indicators. The indicators are, mildly bullish, but fully paid up members are going to see a chart that's going to make their eyeballs pop out, and that's going to is causing me to want to get long gold again on a rally. Crude oil dribbling higher. This is, like I say, this is exactly what I've been looking for. I am looking for this to get up around 68.70, at least 66, something like that. So, as I say, I've been worried that it's just not strong enough of a bull market. In other words, am I misunderstanding the fundamentals? Or if I understand the fundamentals, there's something I'm missing, or else the market should be stronger. Nonetheless, it is a bull market, just not as strong as I would expect it to be. And finally, Bitcoin. As I've been saying now for several weeks, I'm getting more bulled up on Bitcoin. If we break above 41.96, I'll cover the short position and get long. Now, some of you have asked me, where am I trading Bitcoin? The futures. And the reason I prefer the futures is, number one, I won't get ripped off. Nobody's going to hack into the system, and I can go short easily. So I'm never going to be defrauded on the futures contract. So I have security of mind. I know where it is, and I don't really want the Bitcoin. I just want to trade Bitcoin. What am I going to do with Bitcoin? Oh, that's right. There's that one vending machine in Japan where I can buy a soda. I forgot. Okay, but you can see we're starting to put in a low here. The purple predictor is moving up and suggesting that it should lead the market to getting back up and breaking above the 55-day high at 41.96. So that's my trading strategy. That would have given us a nice couple $1,000 profit on the short side. All right, that's it for me. Freebies. I don't need to repeat this stuff, do I? I don't think so. You know what to do. Go get these things. And of course, you really should be signing up to Wall Street Winners. All right, fully paid up members, hang on. Some really interesting developments.